Hi, everybody. There's a few people still clicking in to join the webinar, so I'm going to give it just another minute, and that way no one misses anything, and then we'll get started. So hang tight. Thank you. People are still filing in. I'm going to give it just another 30 seconds here. Awesome. Well, I just want to say welcome, everyone. Thank you so much for attending today's webinar. Before we get started, I just want to go over some basic housekeeping. Everyone is muted, and so this is just to cut down on background noise so everybody can hear. If you happen to have any questions as we're going through, please enter it using the Q&A icon on your Zoom controls, and we will add some Q&A time at the end of the webinar. If you don't have time for questions, we will certainly attempt to email you any responses that we don't address live. So we will be providing contact information at the end, and we will follow up with you. So thank you. Also, as a reminder, this webinar is being recorded, and roughly about 24 hours after the end of the webinar, you'll receive an email with a link to the recording so you can review it later, or you can share it. It will also be uploaded to our YouTube channel, so you can access it there. So thank you all for joining. My name is Urena Jones. I'm the Director of Client Services at Jackrabbit, and we feel very fortunate today to have Sean Deaver here to discuss the 5 things to consider before you discount. So just to build an introduction, if we flip over to the next slide, I just wanted to give you some history here in terms of those of you that may be new to Jackrabbit or those of you that don't know some of our history. Jackrabbit itself was founded in 2004. We have over 6,000 clients worldwide, and our system manages over 8 million classes with 16 million students and is impacted around $20 billion in tuitions that we process, which is just a monumental amount. So, and at Jackrabbit, we commonly get questions about tuition posting, and in May of this year, we began releasing a new and improved tuition posting functionality. It allows you to discount and prorate. So if you haven't converted over, definitely get in contact with us, because about 90% of our clients are actually utilizing this new functionality. So in our conversations with people, we often have people that have built their discounting structures over time, and this means that their structures tend to be complex, they're hard to administer, and generally hard to be consistent on. So the purpose of today's webinar is to impart Sean Deaver's wisdom and simplifying your tuition and making sure that you are paying yourself first and your business first. So without further ado, I'd like to have Sean introduce himself and get started.
Thank you, Urena, and thank you, Jackrabbit, and welcome everyone. It's a pleasure to be here as always, part of our webinar series that I do with Jackrabbit. A little bit about myself. My name is Sean Deaver, as mentioned. I'm a CPA and certified financial planner, and I specialize in the child fitness, child education, child activity businesses across the United States. My firm processes hundreds of tax returns and consulting engagements for gymnastics schools, dance schools, swim schools, theater, music, karate, those types of outfits. And then in addition, through a partnership with Jackrabbit, I also am the owner of Express Payroll, where we do payroll for over 1,000 similar schools. And we're constantly looking for trends and ways to save owners money and make things more efficient. So that's some areas that we help out with as well. As Urena mentioned, Today, we're going to talk about a few items, mainly discounting, a little bit of pricing, and we'll kind of cover some broad type of steps at the beginning, and then as we go, we'll get a little more gradual. There's also an opportunity for you to ask questions. I think there's a link you should see in your on your screen. If you want to ask questions, please do so. I'll save some time at the end. But anything I can't get to, I certainly, or if it needs a follow-up at the end, I'll get those from the listing, and I'll be sure to follow up with people directly. So here's kind of a quick agenda. Without further ado, I'll just hop right in. First thing I like to do is I like to make sure that people understand just a little bit of level setting. And I always like to think in terms of the world of percentages. So as a business, when you collect your income, your tuition, whether it's for dance or gymnastics or swimming or music, we start off with this perfect 100%. And then every day we start paying expenses, and gradually those numbers start to disintegrate a little bit. And traditionally, this is what a end of the year, very high level pie chart would look like as to where your money goes. About 40% of your money goes to labor. That's the red section at the bottom. And truthfully, I see these numbers anywhere from 35 to 55%. But 40% would be a fairly good number, a fairly good, goal on these types of industries. And it gets more refined depending upon the size of the company, whether you offer competitive or recreational only. But 40% again would be a pretty good guideline to or benchmark. Rent is our next largest expense, the gray section here, and that typically accounts for about 20% of all the tuition income that you bring in. If it's much higher than that, you could have some problems, and if it's much lower, then certainly great for you. You might be in a very efficient facility, or perhaps you own the property, you've got a long-term lease where you're recognizing some good rates. But that, again, would be a fairly decent number to go, or a guideline or a benchmark. The yellow section is what I call the other section. And that includes everything, else. So utilities, marketing, professional fees, credit card merchant fees, insurance, benefits, all of these other line items typically and traditionally fit within this 30% number. And then that leaves us about 10%, which is the green part, 10% for profit margin. So I want to make sure that, again, we do, I'm gonna say around 400 to 450 tax returns in these business industry segments. And, again, I'm using real life statistical percentage data here. I'm not picking a number, this isn't what I would tell a pizza shop owner or a consulting firm or anything like that. If you're in these industries, 10% is a fairly consistent benchmark, which I want everybody to, maybe circle or write that number down on a note, because we're going to come back to that 10% quite a bit. People ask me all the time, well, maybe I am at 10%, what should I shoot for? Maybe what are some bottom line goals or expectations? Maybe you're a new facility starting out, or maybe you're thinking about getting into the business, or maybe you're already in the business and again, you just want to benchmark yourself. So I traditionally say, nothing less than 5% of sales. If you're in the 5% sale number, you might want to consider closing and reopening someplace else, strong business changes to get that number up. 5% in these industries is just way too low of a number. Obviously, if you're less than that, then of course you need even further things to do. But 10% would be a 10% profit. So for every dollar you collect, 10% would go into your 10 cents or 10% would go into your pocket. That again is an average in our industry. 15%, however, is a great goal. It's always one I'm striving for myself. I think it's a really good number. 15% on your money is a good return. I think it's a very strong goal for this industry, but something certainly we could shoot for. If you're doing 20 or 25%, that tells me you've got really strong pricing. You've got a lot of efficiency going on. You really are keeping your costs in line. And, again, 20 to 25% is rare, but by all means, if you can get there, that's fantastic. So that would be a real high-end goal for people in these industries to keep in mind. So again, 10% is average, 15 would be above average, but it would be a really strong goal for you. And 2025 is almost unheard of. But again, certainly if you're there, congratulations. I do see in the swim industry, I do see some goals. I do see some profits in this mark. but make sure you keep a memory of these particular numbers, because I'm going to again come back to these in the future. So now let's talk a little bit about pricing, and I always like to again just share some statistics. I like to share some best practices, and so on that line, I want to talk just briefly about monthly versus sessions. You know, traditionally, for many, many years, these industries kind of focused in and worked a little bit towards sessions. And I think with the help of Jackrabbit and, you know, class management providers and software that has come out, I think sessions is really a bit outdated myself. I think we are a monthly society. We get paid monthly. Our bills our mortgage payments are monthly. Our gym memberships are billed to us monthly. Our car insurance is billed to us monthly. So we basically live and survive in a monthly type of environment. If you are not using monthly and you're taking advantage of a tool like Jackrabbit, I would strongly consider or suggest you contemplate changing over to a monthly. It's just easier for the consumer. It's something that they understand. Our credit card bills are monthly. It's just the way that we've been for a while. And I strongly suggest people in a monthly type of environment. Pricing. It's another area where I think we make a lot of mistakes, and there's a lot of opportunities here for owners. And you know, I always want to kind of pass on some benchmarks and pass on some guides and rule of thumbs. And the first one is to always think in terms of percentages. Always raise your prices in a percentage fashion. I like to use maybe 5% as a guideline, and every year I go up 5% on my pricing. That's much different than saying I'm going to go up $2 or $3 or $4 a month or a year, because $3 a month in the first year might be a 5 or 6% increase. But now $3 in the second year, well, that's no longer a 5 or 6%. That might be a 4 or 5% increase. And then $3 the year after that might only be a 3% increase. So you have to remember, as your denominator gets higher, that $3 number is a smaller impact on your increase percentage. So always pick a percentage and kind of go with it. And it's also important to remember you should be increasing your prices annually. Our vendors are increasing. I've never met a property tax bill or a health insurance company that hasn't increased my prices annually. So always remember that, and your customers and clients should be expecting it. And you don't want to ever miss a year, because if you skip a year or you skip 2 years, you might need to do a 6, 8, 10, 15% increase to catch up. So don't let that get ahead of you. Always, always keep a consistent number and go up year after year. And remember to push the market each year. There's an old saying that if you increase your price and you don't lose 20% of your clients, that you haven't increased your price enough. Now, I'm not suggesting that our goal here in life is to increase our business so much that we drop 20% of our clientele, but I would certainly suggest and consider and strive to make sure that when you raise your prices annually, that you do lose a bit of your base. If not, you didn't go up high enough. And again, I share this secret or this tip with people all the time. And traditionally, people call me up, you know, in September, October, and they said, you know, I was so panicked to do it, and I raised 5%. And I crossed my fingers, and I had one family member call me and even notice it. So it's never going to be as impactful as you think it's going to be. So really think about it. And again, make sure you do it. Make sure you do it annually. And your goal is, again, to make sure that you do strip a little bit of your base out each year. I get this question a lot in the dance world, not so much the gymnastics or swimming, but proration of new clients. I get this a lot in every industry. First, let me say, in the dance world, I get questions a lot of, you know, I don't want people coming in middle of the season or, you know, after we've started our classes, because when that happens, they're not prepared for the year-end show or the year-end dance. And my philosophy is you need to take money from people whenever they're offering it to you. If someone shows up in my gymnastics school 3 weeks before the end of the, you know, before summer starts, I would be more than happy to take them in. I'll take their money. I'll get them involved. I'll give them a small part in the year-end show if needed. But at the end of the day, I never, ever turn money away, and nor should you. In terms of proration, what I meant by this bullet was if someone were to come in mid-month, or if you're still utilizing sessions mid-session, again, always make sure you take your money. their money. I do have clients, or I've heard people say in the past, that we make them wait till the following month. It's just a simple proration. If you offer a 4-week month or a 4-week class and they're coming in halfway through the period, you just charge them for the first time half the rate, and then they get back on the normal schedule and they're paying full rate in the next beginning of the session or the next beginning of the month. So always be willing to take money. Don't ever push them. If you do, it's likely they'll go someplace else. And discounts, I'm going to talk about keeping them simple, but that's really something we'll talk about in a few minutes. Let's first talk about incentives. There is a distinction between incentive and a discount. An incentive is a discount on goods or services offered to customers, usually as a reward for repeat business or for bringing in other customers. We see a lot of incentives when it comes to things like car sales or things of that nature, not so much in the service industry where we are, but again, it could be a customer rebate, could be a loyalty rebate for returning customers. It could be used for buyers switching from a competitor school. One incentive I offered as a gym school owner many years ago was I bought a gym in the October timeframe, and we missed that big August-September rush and sign-on period. So one thing we offer, and the other schools in the area had charged a administration or membership fee. So what we did was we offered a big incentive. We will pay your membership fee. And what that meant was if you joined us, if you came over and tried our program, we would waive any type of annual administration or membership fee for that 1 year just to get you in. We didn't want people to think that they lost that money. Other types of incentives might be financing incentives. Again, not too often in our world of these industries, but I just wanted to make sure I shared what an incentive is. A discount, on the other hand, is a deduction from the usual cost of something. Incentive is more one-time type of a product or type of a concept, and a discount is something more recurring. So again, it's a deduction from the usual cost of something, typically given for prompt or advanced payment or for buying in bulk. And in our world, we see discounts and we see them rampant. I see discounts that, for taking a second class or having a multifamily member or taking a second hour. There's discounts on almost anything. And many times these discounts are very difficult to understand. So they have to be very simple. They have to be simple for your people to understand. They have to be able to digest them. They have to be able to figure out on their own. And those are your clients. Don't forget, your staff also needs to know how to handle these discounts and interpret them. So if you're going to offer a discount, make it very simple. But here's something that dawned on me a long time ago. Years ago, as a gymnastics school owner, it occurred to me that one day when I was booking a trip to go to Disney with the family, I went online and I booked 4 tickets to JetBlue Airlines, and to my bewilderment, the second, third, and fourth airline ticket did not have a discount on it. When I called up the hotel and got 2 hotel rooms, shockingly, the Hilton did not give me a 20% off for the second room. And when I went that night through the McDonald's drive-thru and bought 4 Happy Meals for the family to eat dinner, again, they did not offer me any form of discount for the second, third, or fourth Happy Meal. Now, I'm kidding. I don't think I actually did eat any Happy Meals that day. But for illustrative purposes, my point here is that no one else offers discounts. For some reason, in these industries, and I was guilty of it myself at the beginning, we felt it necessary to offer discounts. Well, I run businesses for, I provide guidance and consultation and accounting service for other types of businesses, and no one offers discounts anymore. It's just not something that we do. I would much rather focus on quality rather than price. And something that we did was we phased out our discounts. We started going in the first year that I decided to embark upon this, we grandfathered everybody in that had a current discount and let them know this was the last year of discount. And the following year, we no longer had any type of traditional discounts. The other thing I want to make sure I point out is this. If you think back to the slides earlier where I showed you your profits and your bottom line goals, Remember, on average, that in this industry, most of us make 10% profit. Well, now think to your discounts. If you offer a 10% discount, what have you done? You've just given away all the profit that you've earned on that particular student or family. And if you've given a 15 or 20% discount, well, now you're actually technically paying for that child to take lessons in your facility. You're losing money on that child or family. So if you're going to discount, remember or try to determine what your profit margin is. And if it's 10%, maybe you consider a 5% discount or something smaller. And that's where you need to make sure that you're not giving away the house. So often, I actually just was in a recent client of mine, a recent customer. I was in their lobby and I saw a local dance school advertising lessons. And it said, if you mention this name, you will receive a 25% discount by taking any type of lessons here. I almost fell over. I almost peeled the sign off the wall and drove to that entrepreneur's business to show him or her what they did by offering a 25% discount. They probably have no idea what the discounts are. So make sure, consider phasing these out. If you can't phase them out completely, consider shrinking your discounts considerably. So now let's think about the 5 things to consider if you do have to discount. Again, it might be part of your mission. It might be part of your culture. So some things to think about. First of all, they must be simple for clients and staff to implement. Again, a very simple percentage off the top. Don't have them stacking. So if you take a second class and you have a second child, you get to double up on the discounts. It's just one discount per family maybe, and that's it. They always should be based on percentages, 5%, 10%. That's what they should be, and that's it. And again, remember what your profit and margins are from the prior slide so that you don't give away too much. I would have still considered, I still do this in my current facilities, and these are things to consider. We target discounts, okay? So they are, I said they're gone for the general public, they're gone for general admission. But what we do offer is after we settle our classes in September and October and kids come back to school and they come back from soccer and they all start wanting to take indoor sports again, we realize where we have some openings, what we refer to as slow moving classes. So Tuesday at 1 p.m. is just a slow time for us. So what we'll do is we'll publish certain classes and certain times where we have, 1 or 2 or 3 kids. We don't want to close the class, but we want to fill those spots. And we will offer discounts on those time spots only. And those discounts now, in this instance, I might be willing to take 10 or 15 or 20% off because the class is continuing. And by me putting another body in there, it's not an issue because it's basically what we call a dead spot anyways. But I certainly wouldn't offer a similar discount like that in my prime times, 3 to 7 p.m. plus Saturday mornings and Sunday mornings. So these are slow moving vacant spots. The next time I'll consider a discount is if we have multifamily discounts. And the way we do this is a little bit different. We consider, sorry, I advanced the slide there. We take it and bundle the time. So we might say something like, if your family is taking 1 to 3 hours, we don't discount at all. But if they're taking maybe 4 to 7 hours of class here, we might consider doing a 5 or 10% discount. If they're taking 7 to 10 hours of classes, we might offer a little heavier discount, 10 or 15%. So again, the more you buy, the better the discount. And that's really the only time that we will lead or we will offer any type of discounts. Slow moving classes, as I mentioned, are discounted. And then here's my example where we talk about the more you buy or the more you eat, the better the discount you get. And I thought about this. I kind of stole, the recipe from Disney. The more times you visit Disney, the more discount you get. Now, Disney's a little bit different in that, if they were to add 3 or 4 more people to the park today, they don't have to go hire a new employee. The employees are already set. We have ratios to think about, size of facility to think about. So we can't just have a similar structure as them. but I do like the way they scale things up. So here again would be a tier discount that I talked about, rather than just giving a straight 10 or 15% off for a second class. This way you have to buy more to get more. The last one I'll talk about is a bonus tip here. These are the lump sum discounts. The concept is the same. The thinking here would be, if you were to pay me in advance for 6 months or the whole season, a competitive season, or maybe even the whole school year in advance, I might be willing to give you a 10 or 15% discount. I still see this in practice today occasionally. And again, the message is the same. If you're making 10% on the student and you're giving them 10 or 15% discount for paying in advance, well, you've just given away your profit margin. Keep in mind, with credit cards, the cash flow stability these days just isn't that difficult. Every month, I use my Jackrabbit. I use Jackrabbit as well. I go into my database. Really, my manager goes into the database. She clicks a button, and the next morning, all this money winds up in my bank account. It's automatic. It's auto renewal. It's easy. There's no phone calls made. Money just magically arrives in my bank account the next morning. So I don't have to worry about tracking people down. I don't have to worry about taking a large payment from a client to help me get through things. Money is just almost, I'll say, guaranteed on the first of the month. And keep in mind, the people that are using these discounts or taking advantage of these lump sum discounts, these are typically long-term people anyways. So they might be team members or competitive members who are probably already getting discounted classes. Our competitive teams and prep optional teams that we have at our gymnastics school, they're already getting steep discounts because they're coming so many hours during the week. So we've discounted them. So now for me to discount that on additionally would just be financial suicide. So don't be attracted to the lump sum discounts. I'll address real quickly here, Groupon or value coupon. These are the deal of the day type websites. And these things are really good for, taking a quick vacation, or maybe if you need some laser hair removal, or perhaps a restaurant might be having a restaurant week where they're offering a free, Coke if you buy a meal. So those are really good for those types of vendors. They're not as good for the service business and the industries that we're in, because we're really looking to establish long-term relationships. These types of coupons or deal a day type of offerings, they typically disrupt. They're typically students that they're drop-in students. They disrupt our current classes. These people that use these are typically sampling type of people, and we refer to them as Groupon families. So I would strongly consider not utilizing them for your traditional classes. But where we use them, and they've been beneficial in the past, is getting new people in the door for one-time type items. For example, birthday parties. We have a birthday party. We might, during our slow time, which is, and I'm in Massachusetts, and in the summertime, it's slow for us. People like to have outdoor birthday parties. So we'll offer a Groupon, a 20% off or something, to have a birthday party on the weekend indoors. And that's worked great, because now we get a bunch of new students in, we introduce them to the sport of gymnastics, and then many of them will sign up for our class schedules. Or we do our spring break camp. We might utilize something like that, a free day if you buy 5 days. I've seen wedding packages. These are great if you want to take some ballroom dancing classes or something. Dance schools could use these. These would be great. 5 quick lessons. You get them in. Hopefully they sign up for your regular long-term classes. But if not, you've made a couple of bucks. You keep your employees engaged, give them more hours on the clock, and maybe, again, hopefully you make a little bit of money and you get your name out there. So they do serve a purpose, but again, use them wisely. Scholarships, I won't spend too much time on here. We do offer scholarships to families in need. They're typically done for families in traditional financial hardship. We could also do something where we have a family with five children. All 5 children are enrolled in the program, and I felt it appropriate and necessary to offer a discount to the family, again, because they have so many children enrolled in the program. We do ask traditionally for financial evidence of something, maybe there's a loss of a job or maybe some type of financial hardship. And one thing that I learned a long time ago was I got caught on this on myself, where I had given someone a scholarship because there was a spouse that had lost a job. And 3 or 4 weeks later, or maybe a month or 2 later, I saw the family show up in a brand new car, and I heard them talking about their new vacation they were having in Aruba. So it occurred to me at that time, it was very uncomfortable for me to re-engage that conversation and ask how things were going, but they continued to take the discount on their tuition. So what I do now is if a family comes to me and I approve the financial hardship discount or scholarship, what I do is I give them a series of coupons. It might be 3 coupons, 3 monthly coupons. And they have to come in and pay their tuition and hand in a coupon. And when those 3 coupons end, at that point, they ask for new coupons. Therefore, it forces the conversation to be had. So I would strongly consider instituting something like that just to ensure you don't fall into the same trap that I do and give someone a discount and let them take that discount forever. The next and final part I'll talk about is social pricing. And I learned this concept from a friend who spoke about it. And I've been doing a little more research on my own about it. And I'm even trying to sample it slightly in my own facility and offer it to some of my clients. So I thought I'd share it with you. This is for studios that are at capacity. These are for students, these are for studios that are at capacity. These are for studios and schools that have solid relationships with their families and have a long-term, they've been in the community for a long term, and they offer a very, very high quality of service. So if you fit into these categories, here's some things to contemplate or to think about. Here's a quick financial example of how social pricing or surge pricing might be considered. Let's assume you have a studio or maybe a gymnastics school or a swim school with 1,000 clients with a monthly tuition of $100. In that case, your annual revenue would be $1.2 million. If you took my advice earlier and you put an annual increase, and I'm just going to use the number 3%, I had quoted 5 earlier, but if you did a 3% increase, your next year revenue expectation would be $1,236,000. That would be a $36,000 increase if you instituted a 3% across the board increase. What surge or social pricing does is it actually kind of takes your audience and it splits it into different levels. So with my same example of 1,000 students, we sit down and determine that 20% of the population are not able to pay anything greater than the 3% that we talked about. But 80% of the population is able to pay a higher rate. In this example, if we took our 200 students or 20% and we applied the 3% discount, we would have generated $20,600 increase per month. With the 800 students or the remaining 80% that we feel could have the higher discount, we're applying a 20% increase. Now, again, these numbers are a bit extreme, but we're doing it for illustrative purposes. In the event that we were able to get this implemented, those 80 students, instead of paying 800 students, instead of paying $100 a month, would pay $120 or a monthly tuition of $96,000. So now, what does that do? It brings our new annualized revenue to just shy of $1,400,000. Compared to our original expectation of $1,236,000, bringing us to a new price or a new annual revenue of, or I should say, an increase in annual price and annual revenue of $163,000. Again, you need to ensure that you've got a strong relationships. You've been in the community for a while. Your classes are full or near full, and I'm actually, where I'm contemplating doing this is I'm not sorting through my audience and my clientele and saying this person can, this person can't, but I'm considering it in my peak times. So my 4 to 7 p.m. Monday to Friday, my Saturday morning from 9 to noon, and my Sunday morning and late day classes are all peak times for me. Most of them are full. So I'm contemplating a larger discount on those class times and the other times that are less peak, going with the traditional 4 or 5% increase, and I'm hoping to see if this takes off in future years. So just some things to think about as you pricing for next year or strategizing, or just again something to think about and contemplate for the rest of the year. In my final slide, what I want to do is I want to just send out a public service announcement here, because there was a very big change in the tax code in 2018. And for those of you that haven't heard about it, or maybe your CPAs or professional providers aren't aware of it because it was unique to our industries, or I should say it was not unique, but it impacted our industries quite heavily, is what we call the friends and family discount. What happened here was the IRS implemented a new code or a new regulation that said if you discount for staff members, employees, services greater than 20%, that is now considered taxable. So real quickly, the best way to understand this might be an example. If, for example, my head office manager, and this is a real life example for me, my office manager has a daughter who's on my competitive program, and she would pay traditionally $100 a month for her tuition. And as an employee, I have given her that 100% off. So she pays absolutely nothing to have her daughter partake in our programs. Now, she is a fully paid employee, so this isn't a bartering scenario. This isn't a quid pro quo type scenario. She is on my payroll. I pay her an hourly wage, and as an employee discount or as an employee benefit, I allow her daughter to take lessons at no charge. With the new rules, what happens is I now have to add $80 in my example, or 80% of the discount to her W-2. We do this monthly, but you can do it as frequently as you'd like. But again, since I'm giving her a $100 discount or 100% discount, the first $20 is non-impacted, but the remaining 80 goes into her W-2, and it's considered taxable income to her. So the ruling here is, again, if you offer a discount to your employees between 0 and 20%, don't even pay attention to what I'm telling you right now. You're fine. There's no worries. If it was $100 and you're charging your employees $80, no big deal, nothing to worry about. If you are offering your employees 100% off, well, you need to put 80% of that number, 80% of that tuition in their W-2. And if you offer something in between, let's say, for example, you offer 50% off. Well, the first 20% you don't have to worry about. The next 30%, which is the discount that you're giving, has to be included in their W-2. I know this is a difficult concept and there's a lot of numbers I threw at you, but just remember, if you're giving a 20% discount or less, there's nothing you need to consider. If you're giving more than 20%, that has to be recorded in their income as taxable income going forward. And that was supposed to be live in the beginning of 2018. So if you haven't done it, make sure you reach out to your payroll provider and or your CPA and get this taken care of immediately. As I mentioned earlier, and I'll flip to my next slide here, I am with Express Payroll. It's one of the companies that I own. We're partners with Jackrabbit. We've educated all of our clients on this concept and have a way of handling it very easily. So I would assume most payroll providers should have educated you on this, and also I'm sure they can probably handle this as well. If you're using a local bookkeeper or a CPA firm that doesn't have a robust payroll system in place, it might be something that's a little more challenging, but again, they still should be able to handle it for you. And with that, I'll turn it over to some questions. And again, I also want to make sure that I have my contact information here. If you ever need any information or follow-up questions, or you want to get in touch with me for a free tax return review, here's my contact, and please feel free to reach out anytime. Thank you.
Awesome. Sean, that's just great. Thank you so much. Wow. I was just amazed at some of the statements that you said, pushing the market each year to lose clients. Wow. I'm sure that makes some people a little bit nervous, but good advice. We do have a couple of questions. One of them is, if I'm just opening my studio, should I offer discounts for the first year and let them know it's the only year this will happen, or just don't start at all?
Yeah, great question there. I would definitely not start them at all. It's very, very difficult to give someone a benefit and then claw it back in the future. So I would suggest staying away. Get your business practices in place now. Get your policies in place now, even though you're a first year. Obviously, nothing that says you can't refine them going forward. Nothing is locking you into stone, but I would definitely consider starting on the right foot, and discounts is one that'll be very difficult to claw back. So my suggestion would be avoid them at all costs.
Do you have any advice on if somebody is an established business, feels like they've sort of gotten themselves into an overly discounted strategy and they need to refine and simplify things? Do you have any suggestions on how to approach that? Should that be a phased approach? Should that be something that you change from, one session to the next or 1 year to the next? Any thoughts on that?
Yeah, great question. And kind of similar to myself, I was in a discount with the the facilities that I owned, and we did a phase out. Now, fortunately for me, we were at 10%. So to go from 10% to zero was a step, but not a leap. If you're at 20 or 25, to go from there to zero is going to be very difficult. That is a leap. So I would consider a phase. Perhaps if you're at 20, just as an example, and next year, and again, maybe the next school year, I would sync this up with when you do your price increases. If you do those in January, then that would be the time to do it. If you do it in the August, September timeframe along with the school year, then I would do it then. Maybe you go from 20% to 10%, and then in year 2, you go from 10% to 0%. If you do feel kickback or feedback from certain families, our goal here is to get everyone kind of on the same playing field. But if you do receive, significant feedback or disappointment from a family or two, nothing says that you can't make a special arrangement. Mention that I'm going to give you a special scenario here. Maybe I'll extend it for 1 more year. But our goal here is, we are providing a high quality service. We have other people wanting to get into the classes. So we do need to make sure that we bring, rope these discounts in and bring them to a much lower level. So that's probably how I would suggest taking it.
Awesome. We have a couple more questions related to some other slides. The other one was, is there information on the tax code regarding employee discounts? Where would somebody find that information? Is that something that they can reach out to you and receive? Where would they get that?
Yeah, so first of all, if you're using a CPA, which I hope you all are, they should be, well knowledged on that area. That was a fairly significant change in the tax code back in 2018. Very, very well broadcasted, though. A lot of us think, most employers, whether you're, Staples or TJ Maxx or restaurants or service providers, almost every employer offers their employees some type of discount. So everyone in the world not everyone in the world, but most employers had some type of impact. Now, I'll share personally, my wife works at Staples. They have always had a 20% employee discount, so there was no impact to them. But had they been at 30 or 40%, then that would have been important. Most of my clients in these industries have something in excess of 20%. So easy answer is, multiple answers here. Number one, you could Google it and find it on the IRS website. Again, it was well broadcasted. Your professional advisor should know about this. Lastly, if you come up empty, you can always reach out to me. There's my website, deaverscpa.com. You can click on that. There's a contact us button. Just send a note, and I am more than happy to give you, to discuss it with you or point you in further direction. But it is a guide, or it's a ruling that was put into law back in 2018. So, again, it's something that should be easily found and easily, understood by your current professional advisors.
Awesome. We have a couple more questions and a little bit of time. Regarding delinquent accounts greater than 90 days, what are the pros and cons of seeking a collection agency versus legal action versus writing off the balance? What are the requirements for being able to write off the balance?
Okay.
Pros, cons?
Yep. So sad news, you likely don't get to write anything off. Most small business owners, and I would hope this to be the case, are what we refer to as cash basis taxpayers, not accrual basis taxpayers. And what that basically means is when you receive the money, from the client, that's when you record it on your tax return, or that's when you record it in your books. So if a family walked in right now and gave me $100, I would then put it as on my tax return or in my bookkeeping as $100. If they didn't give me that money, then I didn't put it on my tax return. So there's nothing for me to write off. So again, if you don't give it to me and I don't record it initially, then there's nothing for me to write off. So sadly, there's no write-off or tax benefit that most of us are going to recognize. With that being said, so now that we understand that, if you were contemplating a legal firm or something like that, truth be told, those are more hassles than not. I would make a conscientious effort. I'd send a certified letter. If the balance was significant, thousands of dollars, then I would certainly maybe seek out a collection agency. But I would, and that would have to be for services performed but not collected, as opposed to, let's just say you've been billing someone and they haven't been coming. That you're never going to collect on. So if they've actually been in your classes and they haven't been paying, then again, if it's a significant balance, it might be worth it. Truth be told, for me, I would just flush it and move on. But with that being said, this would bring up a great time to mention, in my gyms and my studios and my schools, it's a policy that we have a credit card on file for every single client. It doesn't mean I need to swipe it, but I need it on hand for these reasons. And I don't ever let anyone get delinquent on their account. At most, we would go 2 or 3 weeks delinquency. And that would mean that, but if they're taking classes, again, it's very rare that we would get any type of delinquency. Great question.
Gosh, I'm sure we could do a whole webinar on just that topic alone. So, Sean, if I could ask you to advance the slide by one more. The next question is regarding, and it's not really a question, so forgive me if I don't know exactly what they're saying, but let's see. Onboarding of new employees with Jackrabbit and payroll. Are there any systems that could make this easier and systemized, digital, completing online forms, background checks, etc.? Is that something that with Express Payroll that is offered?
Urena, I'm sorry. Could you repeat that one more time?
Yeah, it's a tough one. Onboarding of new employees with Jackrabbit and Express Payroll. Are there any systems that could make this easier and systemized digitally, completing online forms, background checks, etc.?
Oh, okay, great, thank you. Yeah, so typically today, the way we have a payroll relationship with Jackrabbit, where they have the time clock built into the tool. So if you're a Jackrabbit user, at no additional cost, you get access to their time clock, which I would say is one of the best, if not the best, built product for these industries. They've really, really done a great job customizing it. Once they're loaded into the Jackrabbit system, then when the time clock is approved, it comes over to us, we upload it and get it, take care of the payroll side. From the payroll side, we do need forms such as I-9s and W-4s, and we do offer multiple services to our clients. We offer a fax and scan email, we offer direct entry by the employer, and then we also offer an onboarding tool, which is something I'll say more electronic and systemized. Just to be very upfront, the onboarding tools that we use are very consistent with others in the industry, and they are extremely expensive. So to process payroll is, pennies in comparison to what I have a client that pays me $150 a month to process the payroll, and they pay $980 a month for the onboarding service, because once you onboard them, they're now in the onboarding tool and they live there and you pay a per month fee. So I don't traditionally drive people in that direction because of the high cost, but yes, to answer your question, we offer it we offer it, and again, it's a consistent price, a consistent tool with other, other competitors. And by all means, feel free to email me, and I could get you full information on that.
Awesome. There's one last question. It may be a question more for me than you, but we can see what we have here. Does everyone enrolled in Jackrabbit need to pay online? And if one does, what banks is Jackrabbit associated with in regard to fees for taking credit card payments? I can jump in on that one, Sean. People are not required to enter a credit card to use Jackrabbit. That being said, that is an option that you choose. That being said, I always like to use the expression of pay yourself first, because the time involved with processing payments outside of credit card payments is often not worth the savings that people perceive, without being connected to a credit card. And so Jackrabbit does offer some options in terms of who you want to process with, and this is primarily because as a software company, we have to build a connection with those resources. We just can't connect with anybody's bank, and so we have a team of people that can help explain who those partners are and what their rates are, and you are welcome to call them and get a quote. So I will follow up with that person in terms of getting that contact information, and they can, absolutely pursue that. Is there any way that
Urena, I'm sorry. I'm just going to add to that. I mirror your comments exactly, echo them. And I'll just share with people a few other bullet points. Years ago, we went to 100% mandatory credit card. You're noticing a lot of vendors doing that. You can't go on an airplane today and buy something without a credit card. They don't even take cash. The amount of embezzlement that I see in the small business world blows my mind. I just received a call maybe 2 weeks ago from two sisters that own a school together. They're a client of mine, long-term client, and one sister was embezzling cash from the other over numerous years. So you can't even trust, unfortunately, your own family. So we went to 100% credit card years ago for all the reasons that you mentioned: ease of use. Money is in my account the first of the month. I don't have to think about it. The measly 2% fee, I built that into the price the first year anyways. So all of those reasons made me move to 100% credit. And now with things like embezzlement and the question that we asked a minute ago on tracking someone down 90 days later, all of those headaches just have evaporated. So I couldn't agree more with your comments. And if you're not taking credit card, please consider it, and do not worry about the measly little percentage or two that the credit card merchant providers take.
Absolutely. Awesome. Well, we are out of time. This webinar will be recorded. Up on the screen are some additional contact information for people if you have questions about how Jackrabbit works, or if you are new to Jackrabbit and would like a demonstration about what Jackrabbit offers. Those two emails at the bottom there are available to you. Oops, I'm sorry, there's one squeaky question. What about debit cards, though? Many customers are not using credit cards anymore and using debit cards, and that's something that, is still available using Jackrabbit. So that's something that, I will absolutely follow up with and send you guys some contact information to get those questions answered. So again, this webinar, thank you, Sean, so much. It is going to be recorded, and everybody that has registered will receive a copy of that recording. So if you came in late, don't worry. There's lots of great information here. Sean has some awesome information on discounting and thinking about your bottom line and what you can do to streamline your business and watching that profit margin. So thank you so much, Sean. And thank you to everybody that attended today. And if we can offer you any assistance, please reach out based on that contact information on the screen. Sean, thank you so much.
Yeah,
have a great week, everyone. All right. Bye.